Hello. I hope you're doing fine. I hope you're doing wonderful. I hope your disco in. This is not a market brief. This is not a gold brief. This is a TLT brief, bond market brief, debt securities brief. I'm gonna be doing a lot of bonds from now on till at least July. I really am very bullish on bonds now, which means bond prices going up, yields going down. And that's something at the start of the rate hike cycle. I think yields are going to go down from here. First of all, the bond market or the debt security market is forward looking. It's amazingly forward looking. It bottomed in December 2015 during the rate hiking cycle. Okay, so in December 20 yeah 2015 we started a bull market in the bond market. Okay, also in August 2020 we had a meltdown. We had a collapse of almost 15% from high to bottom. And this happened during the QEs. So what did the Fed do? It buys bonds, but in this case, bond collapsed because it forecasted inflation right here months before the inflation. It bottomed in March 2021. Okay, and also even before the minutes came out. I think the minutes came out in January 20, or maybe I think sometimes in January, or maybe late, yeah, early January. The minutes came out that the Fed is about to go through a rate hiking cycle, but TLT topped in November 29th. This is the weekly time frame. Okay? And that's something. It gave us an idea about this cycle before it started, like 4 months before it started. Okay? So it's always forward looking. You could go back and do the research yourself. So it always looks in the future. Let's look at the chart. Okay, so what happened today? We had a rejection. Let me do it because it's full of a lot of drawings and things. So let me show you. Okay, so what happened today? We had an amazing rejection. This is beyond a hammer. Okay, this is both a hammer and a bullish harami and rejection. From lower price, we made a 52-week low, and we trapped some bears, and we closed back up. Okay, we had actually five bullish candles back to back. Okay, so this is what happened right here. Okay, so what's beautiful here? Also, we have a positive divergence where we have a low in Jan 2020, Jan 18th, 2022, and the low here we have a lower low, whereas we had a high in the RSI and a high here, and also the RSI failed to go below 30 the whole time of the meltdown. This is really amazing too. Okay, so this is really good. So positive divergence, RSI failing to go below 30, amazing. Also bear trap that came from price memory place, and we close back up. Okay, another thing, using also gap analysis. you have a lot of types of gaps, but I'm talking about now breakaway gap and midway gap and exhaustion gap. So breakaway gap, we had it the first time right here in this day, March 8th. We broke away from this pattern, so it was not filled. This is the breakaway gap right here. Then okay, then we have this amazing midway gap right here. So if you measure from this high to this high right here, or low, you have 1-to-1 measure move to the exhaustion gap. So we had the last one, the exhaustion gap, that equals high to low, high to low. So that's a bottom using gap. Okay. Another thing, we have this beautiful. Let me look at it this way. So the low of October 21 is A. The high of November 2021 is B. C is right here, which is almost 176 Fibonacci extension, which always bring a lot of buyers. It is a very, very respectable Fibonacci extension that brings demand. Good deal. So we talked about this one. We talked about the RSI. We talked about ABCs. And now let's talk about, we talked about the 3 candles of rejection. And also we can talk about the Bollinger Band. It found buyers at the lower end of the Bollinger Band right here. Usually this causes mean reversion to 136 something. Okay, this Bollinger Band, this brought buyers here at the daily time frame. You could look at the weekly time frame. Even though the week is not over. Come on. Come on. It's not waking. Okay, let me change the Wi-Fi I have. Plenty. Come on, man. Don't do me like that. Okay. All right. Okay. So also the price action now at the lower end of the Bollinger Band in the weekly time frame. Now we forming a hammer, even though the week is not over yet. And also it's the price memory of this of 2019 area right here. But it will gather a lot of buyers. See how important it is. And we could change the time frame to the monthly time frame. Another Bollinger Band. So you have the support of the Bollinger Band in the weekly, monthly, and daily. So in conclusion, let me recap. Bottom in process using gaps right here. Bottom in process using positive divergence between the price action and the RSI. Okay. Bottom in process using the ABCs. A, B, C's, Fibonacci extension. Bottom in process using the bear trap. You trapped some bears here. Bottom in process using a price memory. Bottom in process using Japanese candles. Please like if you like, share, subscribe, and do remember the discourse forever.